What's going on, everyone? Hootmoney here with another video for you guys today. Today, we're going to be talking about Aterian or ATER. This stock, I currently believe, has the best chance of seeing a short squeeze in the stock market. And hear me out through today's video. I'll be giving you guys the reasons why I do believe this. Now, with that being said, I do not currently own ATER, so I'm going to try to make this as unbiased as possible from the point of view of someone who does not even own the stock. Now, with that being said, I did purchase ATER at $2.38 and I made a pretty hefty gain on it. So I still was in on the play. Under the current market conditions, I have not been too keen to buy stocks that are already up a decent sum just because of my own personal risk tolerance. But it's always your own decision and your own risk tolerance when you guys are deciding on what plays you guys want to make. If you guys want to see what I am buying and what I am selling, you can do so using Hootmoney Trade Alerts, which is the first link in the description below. And you can find other plays like ATER, and we can get in early on them at $2.38, or that's at least where I got in on ATER. Anyways, my friends, drop a like on the video, subscribe to the channel if y'all are new, and let's get right into this analysis. So as you guys can see right here, Webull is reporting a free float of 56 million shares. However, if we look at Ortex right there, they're reporting 26 million, Fintel as well reporting around 28 million shares. So the upper 20 millions is likely where the free float stands for ATER. And because there was a dramatic decrease from around 40 million shares to roughly 28 million shares in their publicly traded free float, the short interest has increased on ATER because the shares are still being shorted and the float decreased. So the short interest went up to 40%, which is extremely high. On top of the free float decreasing, and I apologize, I'm regurgitating some well-known information, they don't have much dilution, or potential dilution, might I say. They have 13 million warrants that can potentially dilute their float. However, these warrants have an exercise price of $25 and $15. The March 2022 pipe warrants that have a $3.20 exercise price, those are not exercisable until 6 months. So it is registered, it is effective, but they cannot do it until, I believe, September. September is 6 months from March. They also have a shelf right here. Now, what the shelf it means is that they essentially, and this is effective as well, they can essentially sell upwards of the remaining capacity of $51 million worth of shares. But notice that this was from July 20th, and they've only really gone through 24 million shares. Typically speaking, a shelf offering is not a huge dilutive impact to the stock price, as they can pretty much do this offering whenever they want up until this expiration date right here of 2023. So it's really not a huge factor of dilution, and as you guys can see, that's why they don't even include it in the potential dilution numbers. The biggest potential dilution for ATER would come from them just creating a whole new offering altogether. They have the ability to do it. As you guys can see, the offering ability has a high rating, and that indicates the company has the ability to conduct a discounting offering through a shelf offering or a S1 offering. So again, unless you guys think the company Aterian is just going to file a random S1, there's probably not going to be almost any dilution in this stock's free float. And let me remind you, the company Aterian has investigated naked short selling. So if there's some type of short squeeze going on, I highly doubt this company is going to want to, sell some more shares. I doubt they want to dilute their way out of a short squeeze because they're investigating naked short selling. They want their share price to squeeze. I'd like to quickly thank the sponsor of today's video, which is Moomoo, a licensed FINRA broker that does absolutely zero payment for order flow. They're running a promotion where all you have to do is deposit $1 on their platform. You can get up to $7,000 in free stock. And if you meet the other deposit conditions right here, you can potentially get 5 free stocks up to $3,500 each. So it's absolutely the greatest promotion that I've seen from any brokerage. You can find it using the second link in the description, first link in the pinned comment section. It's essentially like free lotto tickets on Hootmoney. Check it out, guys. Moomoo, links are below. Let's get right back into the video. Doing some technical analysis on ATER using Market Cypher. If you wanted to check out Market Cypher, there is is a link in the description. It did give the red dot signal. The red dot signal could potentially mean that momentum is slowing down. However, what you need to understand is when there is a short squeeze, you're not going to get accurate sell signals because it can stay in an overbought territory a lot longer than what would make sense. And just to explain that to you, here is the GameStop short squeeze. You could have sold on this red dot right here at $42 a share, but what you'd be leaving is over 1,000% on the table. So understand, during a short squeeze, it can remain overbought a lot longer than what would make sense on any other stock. 4-hour chart here is also showing some downside risk. There is bearish divergence right here, so keep that in mind. The 1-hour chart is showing that it's ready to bounce back up. Last time it was on a negative blue wave right here with the VWAP pointing up. The VWAP is this yellow. It's basically telling you where the momentum might be heading in the future. Last time it did this, it was on this signal. It led to a very solid pump. So overall, I have to say, technicals are showing that this thing is overbought, but you just don't know when it can stop. You can predict that it stops right here. Boom, it goes even higher. You can predict that it stops right here. Boom, it goes even higher. When you're dealing with a short squeeze, technicals almost don't matter whatsoever because it can just remain in this overbought territory. Now, one thing that I do notice is that these short squeeze stocks, when they're trending upwards, they do often follow these Wyckoff-like patterns. Like you can see right here, it does this Wyckoff-like pattern where it has the spring, the retest, explosion, the retest, explosion. So that right there is a Wyckoff accumulation pattern or reaccumulation pattern. However, what we are seeing from this run up is not necessarily looking like it is in reaccumulation currently. It's looking almost similar to a distribution pattern, which is definitely a risk. And as you guys can see, here is how a distribution plays out. And usually the indication that something is in a distribution is when you do get that breakout, it cannot sustain the support level. Accumulation would mean it sustains this support level right here, or the old resistance level, it turns into a support level. Distribution would imply that it gives up the resistance level as a support level and it goes down even further. And that's kind of what we're seeing right here. And please don't just write this all off as FUD. I already admitted that technicals mean almost nothing when we're talking about a short squeeze stock, a stock that's undergoing a short squeeze. I still think this probably has the highest chance of actually seeing a short squeeze in 2022 of anything that I've actually seen this year. So understand, I like to talk about the potential catalyst and the potential risks and not undermine any one of them. So here you guys can see the Unusual Whales option flow. Again, you can check out Unusual Whales. There is a link in the description for that. But what we are looking at here are premiums of $10,000 or more, which are big bets, especially in a short squeeze stock. Ask side only, meaning that you're only buying calls and buying puts, not selling. It's a better judgment of sentiment that way. And as you guys can see, it was extremely bullish with multiple sweep orders throughout the day, multiple insanely large orders, likely hedges right here. I mean, $244,000 worth of premium is absolutely absurd. And on BBIG's run from $2 to $6 back in January, nothing even came close to $200,000 worth of premium. Another one right here for $228,000 worth of premium. So these are likely hedges against a short position or some type of naked short position, right? But they are super significant and you can definitely capitalize off the long side. Here's another one, 245,000, 132,000, 121,000. I mean, the premium that is just coming in on ATER is absolutely remarkable and it's absolutely insane. 174,000 right there. All right, so you get the point. It's extremely bullish, coming in at 94% bullish overall, targeting the 520 expiration and the $10 strike price, which is out of the money. It's by a significant sum, by almost like what, 80%? Yeah, so out of the money by 70%. That's absolutely insane. Here's the historical flow breakdown for ATER. As you guys can see, call option volume is at a very remarkable level. It's very similar to what it was doing back during its September rally in 2021. Generally speaking, buying call options becomes a lot more risky when call volume is very high. Especially considering that the IV EV is up a lot too. You can pull that up right here and we can see the implied volatility. This is at another high level. It's chilling between about 200 and 250%. Again, not quite as high as it was back here in September, but it is still substantially high considering that majority of the time the implied volatility is hanging out under the 150% level. The max pain for April 22nd is at $4.50, which does imply some downside risk considering that max pain is it's the strike price that would imply that the most amount of call buyers and the most amount of put buyers would lose money. However, the past 2 weeks, ATER actually expired above the max pain. So unlike some other stocks, ATER has actually been beating the max pain on the long side, which is absolutely incredible. And it just shows how much of a powerhouse this is. If we're looking at the 5/20 expiration, which is the next monthly expiration, that's a $5 max pain. And then if we're just looking at the June expiration, the max pain is at $2.50. Here's the implied volatility skew. It's your friendly reminder that buying those weekly call options extremely risky because they are the most expensive contracts as they have the highest implied volatility. So understand, if you're an options buyer and you're buying these weekly call options, it's like you can make a ton of money, right? You can make so much money, but you're more likely to lose money, and time is not really on your side. So I always say to be careful. Even though I can't give financial advice, just be careful with these weekly call options. Yeah. And then here is the gamma exposure for ATER. It is all positive, and there's a nice gamma ramp all the way up to $8 per share. So what's absolutely extremely important to understand about ATER if you are betting on a short squeeze to occur in this stock is the fact that the hedging on this stock via call options is more insane than pretty much any other highly shorted stock on the stock market. We went over those call options, right? Over $200,000 worth of premium on multiple different contracts purchased, over 100,000 on even more, right? This is very, very remarkable, and it cannot be ignored. Usually when you're seeing that type of money being poured into a stock, it's not because some retail investor from r/short squeeze is dropping $200,000 on a call option contract that's out of the money. What that is likely a market maker, likely someone who has a big institutional short position hedging their short position to prevent them from essentially getting squeezed. If you have a call option, you can prevent the infinite loss that you can potentially get from a short position. It's a way of hedging. I've talked about this in the past. Retail needs to start hedging. Retail needs to start buying puts against their shares to continue to have a positive delta on their position, but manage their risk, because if you do have that put option, especially after your share price has gone up a decent sum, you can be in a position where it is literally impossible for you to lose money. You can hold your shares forever. It raises the max pain, meaning that market makers are more likely to go to the upside rather than the downside. And at the end of the day, a short squeeze is a game of risk. We're combating hedge funds that are essentially going short on these stocks, using call options to hedge their short position to prevent them from an unlimited liability if there is a short squeeze. There's absolutely no reason that retail can't be limiting their risk as well through the option of buying a put option. I'm not saying to go out and buy a put option. All I'm saying is that it would significantly help the case for a short squeeze if retail were to start hedging their positions. Because at the end of the day, this is a game of risk, and the way that market makers are able to regain control on all of these short squeeze stocks is because retail is over leveraged and over risked. If you think about it, like if retail is just buying shares but then buying call options on top of that, it's so much easier to manipulate the stock price and get a retail investor to sell their position for a loss, because the amount of risk that they're taking on is absolutely extreme, right? But if you're able to hedge that risk, you're like way more likely to be able to hold on to your shares. And at the end of the day, what a short squeeze is people owning the shares and then short sellers not being able to find them. So in my opinion, and this is completely unrelated, this whole spiel, but I just wanted to bring it up in this video. In my opinion, retail needs to start hedging. and that's how we're gonna win. This is a game of risk, and we need to hedge our risk. Anyways, that's about it for the video. I hope you guys enjoyed. As always, drop a like on it if you guys did. Subscribe to the channel if y'all are new. Check out Moomoo if you want up to $7,000 in free stock. As long as you deposit $1 on their platform, you can find that using the second link in the description or first link in the pinned comment section. And if you want other plays like ATER at literally $2.38, join Hootmoney Trade Alerts. That's the first link in the description down below. Anyways, my friends, that's about it. I'll be seeing you guys next time. Have a wonderful day.